Here again, good afternoon. Welcome to this virtual town hall hosted by the Air-Beverly Crest Neighborhood Council. I'm Dr. Travis Longcore, president of BABCNC. Our council represents 27,000 residents, give or take, in the hillside communities between Laurel Canyon and Sepulveda Boulevard, basically Mulholland down to Sunset, excluding Beverly Hills. Communities that are living the California insurance crisis in real time, as we've already heard here today during public comment. This afternoon, we have 8 candidates running for California State Insurance Commissioner, the most powerful insurance regulator in the nation's largest insurance marketplace. We've invited them here because this election may be one of the most consequential for our neighborhood in years. The insurance commissioner sets the rules that determine whether homes in high fire hazard severity zones can be insured, at what price, and what happens when disaster strikes. I'll now turn the meeting over to our interviewer, Emmy award-winning journalist Alex Cohen, who will guide the question and answer portion of the forum.
Thank you very much, Travis, and thank you to the council and everyone who's here today and our candidates for having me. We have so much ground to cover this afternoon, but first we're just going to go through a couple of pieces of housekeeping. The Neighborhood Council invited candidates registered in the election for California's Insurance Commissioner to participate. This is a forum to learn about insurance issues and the solutions proposed by the candidates with us today. Questions were developed by the leadership of the Neighborhood Council, and they reflect the predominant concerns of communities, especially those living in hillside areas with high fire risk. We will not be able to get to all of the questions for all of our candidates, but hopefully we'll cover a lot of ground. Here's what we're going to do, candidates. We are going to begin with opening remarks for 1 minute and then turn to a series of questions. Each candidate will have no more, you may take less, than 1 minute to respond. I want to remind everyone that this is a forum and not a debate, so we will ask each of our candidates with us today to focus on their own policy and not to criticize others, as we will not be having time today for rebuttals. I also just want to do one last time check. We've got Aaron, who is our time checker today. At the end of 1 minute, you should hear a ding, but to give you a little bit of a heads up, candidates, here's what you'll see when you have 15 seconds left on the clock. Yellow card. And when there is no time left, in addition to that bell, you will have the red card. And if need be, I will jump in, but please don't have that be the case. So now we will start with the opening statements, for which we will have a minute apiece. We will be going in alphabetical order, which means we begin today with Ben Allen.
All right. Well, good afternoon, everybody. Thank you for being a part of this discussion about a very important but very difficult and sort of understood job in state government. I'm Ben Allen. I've been representing portions of LA County, including your neighborhoods, in the state Senate now for over a decade. Been a strong environmental champion, a strong consumer protections champion, someone who's also really fought for campaign finance reform and political reform, been ranked #1 in the legislature by the California Clean Money Campaign through my time in the legislature. Also have taken on difficult industries on behalf of consumers, oil industry, petrochemical interests, the hospices, car dealers, so as to create more transparency in the system. Obviously, this last year was incredibly difficult for all of us. We helped hundreds and hundreds and hundreds of people get the payouts that they deserve in the wake of the disaster in the Palisades. But it gave me a window into how broken the system is, the massive dysfunction of the system. I've taken on the insurance industry with a raft of pro-consumer legislation, the one we just passed last year. I'd be honored to have your support.
Thank you. We go next to Stephen Bradford. You have a minute.
Thank you. Appreciate the opportunity to be here today. My name is Steve Bradford, and I've spent the last 26 years of my life as an elected public servant, not as a politician. And the only reason I'm seeking this office is to do the work, not to use it as a holding place till I run for something else. This will be absolutely the last office I seek, an elected position, I should say. We're in a crisis here in California. So I look to modernize the Department of Insurance, making sure that the 1,400 men and women who do the job every day have the tools necessary to do it as efficiently and as effectively as possible. Also want to have a relationship with the insurance industry. We cannot do this in a silo. I've had a history of working with industry, working on tough issues in my 26 years as elected official, 14 in the legislature, have pragmatic working arrangements, and that's what you're going to need, someone who can bring everyone together and solve this problem. We can't do it in a silo. Like I said, I asked you to look at my record of 26 years of delivering tough solutions for Californians.
Thank you very much. We will go next for 1 minute to Merritt Farron. You may begin.
Hi there. Thank you for having me. So I am a longtime Californian. I love this state, and it pains me to see the affordability crisis that insurance is creating today. My home was burned down in the Pacific Palisades fire. After that, I joined the State Farm rate proceedings as a consumer intervener on behalf of consumers to try and help the community that I came from. In doing that, I got enmeshed in the world of insurance challenges. How did we get here? It's really been a death by 1,000 cuts. We've had a lack of leadership in Sacramento for decades. We have had insurance companies meddling in reform. We've had trial lawyers meddling in reform. What do we need to get out of it? We need an entrepreneurial mindset. I come from Amazon and Disney, two of the country's most innovative, consumer-centric companies. I want to bring that expertise and the innovative mindset that I learned there to solve our insurance crisis. I'd be happy to have your vote. Thank you.
Thank you very much. Our next candidate should be Jane Kim. Do we have Jane Kim with us?
Not yet.
Okay, going once, going twice. We will then go next to Stacy Korsgaden. Thank you.
Hello, everyone. My name is Stacy Korsgaden, and I'm running for Insurance Commissioner. A little bit about myself. I was raised in Visalia, California. I moved to San Luis Obispo, where I went to Cal Poly University of San Luis Obispo and gained my bachelor's of business management. Also, I went to UC Santa Barbara and gained my certificate of financial planning. For 40 years, I owned and operated an insurance firm, and I served and protected small businesses and working families before, during, and after a claim. And serving my clients has always been the priority, and I instilled that service mindset with my wonderful staff. I'm running for commissioner because Sacramento's policies have failed Californians, and I cannot watch the inexperienced leadership that we have and our failed policies continue to destroy our way of life. I've traveled to California. This can be fixed.
Thank you. We go next to Sean Lee. You have a minute.
Thank you for Beverly Crest Neighborhood Council for hosting this critical conversation. My name is Sean Lee. I came to California, Pasadena, exactly 30 years ago. I started as a scientist, trained at the JPL, NASA, Caltech. And for over 27 years, I have been working inside the insurance industry, building company, building agency, advising families, and seeing firsthand where the system is broken. Let me be direct. California insurance market is not just stressed, it's failing. Families are being dropped, premiums are exploding, and fair plan, which means to be the last resort, is becoming the only option. This is not a Wi-Fi problem alone. It's a system design failure.
Thank you, Mr. Lee. I'm sure we'll be hearing more about that later in our discussion. Our next minute for opening statements goes to Lalo Vargas.
Hi, thanks for having me. I'm an environmental science teacher in Northeast Los Angeles, and I was recently part of the bargaining team that helped negotiate the contract on behalf with LAUSD and UTLA on behalf of 32,000 educators. The climate crisis is here, and it's the main reason why insurance companies say they can't continue to insure Californians at the same rates as before. And they go to the insurance commissioner and they ask for double-digit rate increases. When they don't get what they want, they essentially hold us hostage and say that they will leave the state entirely. And if you can't find insurance, then you're paying exorbitant prices. My core contribution as head of the department would be to put people before profits. That means holding insurance executives accountable, enforcing the insurance code, and pursuing enforcement and accountability as a pathway to ensure that there's full compensation for all fire victims, and also to build a public insurance option so that we don't have to rely on the private market for something as critical as the safety net of insurance.
Thank you very much. And finally, we will be hearing from Patrick Wolf. We have a minute.
Thank you very much. I'm Patrick Wolf. I'm a lifelong Democrat running for California Insurance Commissioner. And my campaign is based on the radical idea that the person we elect to be the next insurance commissioner should be someone with real insurance experience, not a politician. Early in my career, I spent 4 years at a major bank where my job was to build an auto and home insurance brokerage business. I got firsthand experience working with customers and carriers, learning how insurance markets operate. And then over the last 20 years, I've worked as a financial analyst, analyzing and investing in companies and markets, including insurance. My plan is based around 4 big ideas. First, I will hold insurance companies accountable. Second, I will dramatically increase choice and competition. Third, I will significantly improve transparency. And finally, we need to both align incentives and take direct government action to reduce risk, especially wildfire risk. I am not running to launch a political career. I will not run for any other elected office of elected insurance commissioner, and I would be honored to be your next insurance commissioner. I ask for your vote. I'm Patrick Wolf, and if elected insurance commissioner, I'll be a wolf on your side.
Thank you very much. And now, as we move through our series of questions, we're going to maintain that alphabetical order. We will shift up each time, which means the first question here will go to Stephen Bradford. We'll go down the line. Mr. Allen will be at the end. We'll move up each time. So here's our first question. Each candidate will have exactly 1 minute. The insurance commissioner regulates not just homeowners insurance, but also auto insurance, disability insurance, long-term care insurance, and much more. The average consumer of insurance, the average cost of full coverage in California right now is among the highest in the nation. The commissioner does have a role in addressing climate-related risk across all insurance lines. So to each of our candidates, we'd like to ask, beyond fire and homeowners insurance, what is the single most important insurance problem that you would prioritize as commissioner? What specific action would you take on it during your first year? We begin with Stephen Bradford.
Well, workers' comp fraud is one of the big issues, but I think our biggest challenge is just the time it takes to review claims, the time it takes to get rate approvals, whether it's approvals or denials, it takes too long. And that's what's driving up rates in California. It's only one other state that takes longer than California for a rate review, and that's Colorado. So I want to bring forth modernization of the Department of Insurance, helping those men and women do their job more efficiently, I should say, but also hold the insurance industry accountable for their delays in claim reviews. But workers' comp is one of the biggest issues, and we want to have a bigger team to investigate both fraud and denials in the insurance industry. And that's what I would like to implement as the next insurance commissioner: greater efficiency and quicker response.
Thank you very much. We go next to Merritt Farron.
Thank you, and thank you for asking this question. I've been on a number of panels now with the others who are on the panel here today, and we rarely get questions outside homeowners insurance. And it's absolutely true that in all lines of insurance, we have people who are suffering, we have businesses who are suffering. I've been meeting with so many up and down the state. What I would do is I would do what we did at Amazon and Disney. We would get experts together, and we would go insurance line by insurance line to look for places that we could pull cost out of the equation, right? It might be that in some cases, for instance, in workers' comp, where I've spoken to individuals, that there is a process which takes way too long and is too burdensome, and that winds up in litigation too often. So we need to go insurance line by insurance line. And finally, and this is true across the board, we need to bring technology in to solve all of our problems, to allow consumers to understand exactly what they're buying up front, with a commitment to deliver from the insurance companies that will allow the insurance companies to compete. Thank you.
Thank you. We go next to candidate Stacey Korsgaden.
Thank you. I am going to, I've traveled the state of California, and the fundamental concern right now is homeowners insurance. That's the hot item. I want to explain why this is all happening. One of the major factors in California is, for decades, we have had a rising risk environment. I did some research in Bel Air, and in 1961 was one of the biggest fires in our country's history, and it destroyed hundreds of homes. From that fire, Bel Air, they implemented no wood shingle roofs. They had very strict brush clearing, and that helps save future larger fires in Bel Air. If you were an insurance company right now looking at our crime, our wildfire, our homelessness, our untreated forest, all of the lack of forest management and water management, the first thing that we do when we sell an insurance policy or we purchase a policy, we have to be insurable.
Thank you. We go next to candidate Sean Lee.
Thank you, Alex. For me, I believe the most important issue for all California is the auto insurance, because the auto insurance, the affordability issue driven by fraud and litigation. 10 years ago, we have our insurance group went to China. If two persons hate each other, they just use their cell phone, took picture, then loaded the picture up to our app. Then half an hour, maybe sometimes a little bit more than a few hours, the settlement will be done. The money will be in your account. But in California, few weeks, sometimes few months, even more than a year. So that's why I want to propose data-driven fraud crackdown plus AI underwriting transparency. Think about it, California, $20 billion fraud. So I believe let's start from auto insurance fraud first. Thank you.
Thank you. And we'll move next to candidate Lala Vargas.
The number one concern I hear from folks across the state and across LA is the worry around health insurance and health insurance costs going up. Now, the insurance commissioner in California is one of the few insurance commissioners nationwide that does not have full purview over health insurance. And that's despite us being an elected role. And I think we should change that. We should use the vast resources of the department to launch a public education campaign across the state on what single payer healthcare is, why it's necessary, why dispelling the myths that we are told to go against a single payer healthcare system, and then work with the state legislature to actually create a task force to cost out what it would look like to implement a single payer healthcare system and what implementation looks like in the state. I think it's entirely possible. Health emergencies are one of the biggest reasons why folks go bankrupt in this country. As one of the largest economies in the world, California has the power and the resources to deliver single payer healthcare to everyone.
Thank you. Up next will be Patrick Wolf.
Thank you. I'd like to talk briefly about three things that stretch across all lines of insurance. First is people need to have the confidence and the knowledge of how insurance companies handle their claims. We collect this information already through what's called market conduct annual statements. It's not made public at the company level. I'll change that. You'll have a scorecard on every single insurance company to know how they handle claims so you can hold them accountable. Second, I agree with Steve about the need to really radically streamline the time it takes to review company filings. This will greatly increase choice and competition, make it much easier for insurance companies to come to the state, again, across all lines of insurance, also while always holding insurance companies strictly accountable. And third, I'd like to echo something that Merritt talked about, which is technology. Again, across all lines of insurance, it starts with the Department of Insurance itself, whose technology stack is woefully behind the times. The website needs to be updated. The back office needs to be updated. There are also opportunities to apply technology directly in lines of insurance. Thank you.
Thank you. And finally, for question number one, Ben Allen.
Yeah, I appreciate the question. There's so many different ways to answer this. Let me start by alluding to what Sean said about the importance of auto insurance. We know what a massive impact that has on people. I'm one of the many endorsements I'm most proud of is the endorsement of Marta Escutia, who actually wrote the low-cost auto insurance program for low-income people who need access to low-cost auto insurance. And I want to see that program expanded. I want more people to see that it's available. I think we have a massive problem on our hands with people that are underinsured. And then when they get into accidents, that ends up driving up costs for everybody on the auto insurance side. So we need to make sure that more people know about the availability of this low-cost auto insurance program so they can get themselves covered. So that would certainly be one of many priorities. I also agree with what Merritt talked about in terms of going line by line with these various industries and just bird dogging every issue. I've worked with people in the Hollywood studios. I was the lead author of the TV film tax credit. I've learned about their insurance challenges, affordable housing developers, their insurance challenges. Well, a lot of what we're going to need the commissioner to do is bring insurers to the table with these industries and work on how to reduce risk so as to get them affordable insurance.
Thank you. For question number 2, we will begin with candidate Merritt Farron. The question is this. The insurance commissioner is an elected official who sets policies for industries which spend heavily on political campaigns. Many argue that the commissioner is too close to the insurance industry. Critics from the other direction argue that the commissioner is too adversarial to insurers, driving them out of California's market. The question is as follows. How will you, if elected, maintain independence both from the insurance industry and from political pressures in making decisions about rates, coverage requirements, and market rules? We begin with Merritt Farron. You have a minute.
Thank you. Yes, I come to this race with one purpose only, to make a difference. And I'm not connected to any existing party, essentially. Both parties, to be clear, have taken significant money from the insurance industry. Both parties do. And this has been incredibly inhibiting in getting us the reform that we need. So my perspective is that I come from companies that believe you can put the customer first and also do well as a business, right? That is the key. Not all insurance companies believe that. Some of them do. I believe that we can roll into that sentiment, and I would absolutely work to attract the companies that know how to put the consumer first, make sure that they can thrive while holding the others accountable. I believe that we can do both. I've already spoken to a number of companies who want to innovate in this space. They will come into this space. I'm hoping that the existing ones will also be happy to come along with the reforms that we need. Thank you.
Thank you. We go next to Stacy Korsgaden.
Yes, I've worked with insurance companies with a lot and alongside my clients for nearly 40 years. And in the world of getting protection, number one, both need to be healthy. And there's been plenty of times when there have been some type of claim or some type of issue where I felt that the insurance company was absolutely wrong. And I fought alongside my client and protected them and invariably won. You have to have a healthy insurance environment. One of my top priorities is to open up a new business division at the Department of Insurance and welcome as many healthy insurance companies into the state to compete for your business. And also, my job as a regulator is to make sure that they're fiscally strong enough to keep their promises. And I have committed that I will not take insurance companies' donations. But some of my biggest supporters are insurance agents that serve you across California.
Thank you. We go next to Sean Lee.
Thank you. Yeah, when I started my insurance career back in 1998, I was still a postdoc scientist at JPL. We always started as an independent agent, or later on, we built an independent agency. Myself and my agency never just represent one company. So we always have quite some carrier compete each other. So that's why I believe from individual consumer to insurance agent or agency, insurance company, then reinsurance company, we should build a harmony ecosystem. Inside this system, we hold each other accountable. So that's why transparency and accountability is the key. Before AI, before big data, maybe hold each other accountable is pretty tough. Now I believe with AI, with big data, with technology, if we have right regulation, we can hold each other accountable. Thank you.
We go next to Lalo Vargas.
In my view, the head of the Department of Insurance isn't responsible for running an insurance company. He's responsible for running the nation's largest consumer protection agency and being the chief negotiator between the people of California and the insurance companies. And so what I've learned from being a negotiator with the nation's second largest school district is that large organizations, large corporations do not necessarily listen to reason, but they do listen to working people coming together and making their voices heard. And so my campaign with the Peace and Freedom Party is independent from the two parties. We're not taking money from the corporations, but we're also encouraging people, don't just vote, vote with your feet. Get organized, hold press conferences, make your voices heard so that way we can exert a political power to hold our electeds accountable. Without that kind of mass movement that encompasses survivors of fires and policyholders across the state, any candidate runs the risk of becoming the next Ricardo Lara.
Thank you. We go next to Patrick Wolf. You have a minute.
Thank you very much. It's a great question because the insurance commissioner regulates insurance for the benefit of the customer, right? And so you absolutely have to maintain that focus. So first, some basic things. My campaign's not accepting any money from insurance companies. I won't accept any corporate gifts while in office. I think the current insurance commissioner, unfortunately, has not set the right tone there. But also, I will not run for any other elected office after insurance commissioner. And I'm not going to, I was just on a panel a few days ago where I pledged I won't go into the insurance industry after first 5 years. I'm not doing this to get a job in the insurance industry. I'm not doing this to further a political career. My entire motivation for doing this is to do the job. And so I do think that that intrinsic motivation is very important and something ultimately that the voters should judge about each of us, not just by the pledges we take, but also by the way that we comport ourselves and what our focus is. Because I do agree, it's absolutely central to regulate for the benefit of the customer.
Thank you. We move now to Ben Allen.
Yeah, I think it's very important we have someone in this position who's very independent of the industry. A lot of folks are saying they're not taking money from the companies, but they're taking money from the agents or the brokers or other folks that are part of the insurance industry. And I just think independence is really important. I'm actually fighting the insurance industry right now through legislation, a whole slew of pro-consumer bills that I've put up to try to make things better for working people around the state vis-a-vis the insurance industry. So I'm taking them on. Now, I will say a lot of my success getting difficult legislation through the legislature, including my big environmental successes, have involved deep dialogue with industry, not ever taking orders from them, never deferring to them, but listening to them carefully, engaging with them, understanding their business model, their needs, focusing on the eyes on the prize to protect the public, the environment, and consumers, and getting difficult legislation through. So I'm not about trying to vilify them, but I am fiercely independent of them, truly independent of them, and I'm taking them on right now and negotiating intense pro-consumer bills right now with them.
Thank you. Finally, we'll hear from Stephen Bradford.
Jen, I appreciate the question as well. And I ask you to look at my 26 years as an elected official and show me anywhere where I've been compromised. But you do have to have relationships. So I'm not here to attack the insurance industry, but I'm not here to defend them either. I'm here to have pragmatic adult conversations of how we solve this market and how we stabilize this market. And it requires dialogue. I'm from the Shirley Chisholm School of politics. I'm bought, I'm boss. I voted with utilities and voted against them. I voted with tobacco, voted against them. I've been on very many tough bills where I've looked industry in the eye and said, no, I can't be with you. But we still had dialogue. We still had adult conversations. I authored one of the first police decertification bills in the state of California. Law enforcement completely opposed it, but we were able to bring them to neutral because of compromise, because of dialogue. You have to have dialogue. You have to have a relationship. I've had an open door for 26 years as an elected official. That's what I'll do as an insurance commissioner.
Thank you. For question number 3, which will go first to Stacey Korsgaden, we're talking about California's FAIR Plan, a plan that was designed as an insurer of last resort, a temporary backstop, and yet today it carries nearly $500 billion in exposure statewide, with more than $112 billion in LA County alone. Following the devastating wildfires of last year, a $1 billion assessment was levied on all insurers operating in California to keep it solvent. The FAIR Plan's own former president has warned that a single catastrophic event could make it insolvent. Our questions to the candidates is the FAIR Plan sustainable in its current form? Should it be reformed, replaced, or supplemented? And what specifically would you do if elected to ensure that Californians who can't get private insurance have reliable, adequate coverage when disaster strikes? Again, we begin with Stacey Korsgaden.
Thank you. The answer to that question is no. No one wants a FAIR Plan. No one likes the FAIR Plan. And it's always been considered the policy of last resort. As an insurance professional, I can tell you the reason why we are leaning so hard on the FAIR Plan is because insurance companies no longer want to do business in California. And the answer why is because we have all of these rising risks. Sacramento has smash and grab, homelessness on the street, increased crime, lack of mitigation, lack of forest management. All of those things have caused increased risk. So the insurance companies are saying we cannot collect. And then on the other side, we have a Department of Insurance because of Prop 103 will not allow the companies to properly rate. What we need to do is lower the risk, bring in more companies, and depopulate that FAIR plan and use it as it was always meant to be, which was the company of last resort. Another thing, thank you.
We'll have to save it there, and we'll head next to candidate Sean Lee. You have a minute.
Thank you. Yes, FAIR plan is no longer a drop stop, as Stacy mentioned. It's become the market itself, which is, I believe, is a totally failure. It's not absolutely not sustainable in its current form. So that's why I propose something called California Catastrophe Reinsurance Partnership. Basically, from insurance company, insure to reinsurance, like Munich Re, Lloyd London, we add one more layer called CCRP pool, money pool. Then with the private equity fund, the investors. Because we add one more layer, so a lot of insurance company, they have more confidence when the big catastrophe, wildfire, flood, earthquake happen, then they are still around. They don't need to bear the unpredictable somehow the risk. So I believe that
We
can
have
solve
to
the
leave
issue.
it there. That is a minute time. We head next to candidate Lala Vargas. You have a minute.
Yeah, the FAIR plan is totally unsustainable in its current form. And what happened to the Palisades in Altadena is proving it, that it cannot even offer the most minimal smoke coverage for damage to people's homes. And so I believe it should be replaced, but replaced with a public insurer. Insurance operates on a fundamental principle called the law of large numbers, which means that the more people chip into the pot, the less the risk is for everyone, and the cheaper it is for everyone. FAIR plan, what it does is it carves out a slice of that pot for the insurance companies for the most, and it puts the most fire risk areas in their own pot, isolating them from the rest of it. If we have a public insurance system, what it does is it puts everyone in the state into the same pot, and there's no profit motive. So that means that people can pay less for insurance. There's no multi-million-dollar CEO salaries, and the state is incentivized to pay you as quickly as possible, and the state cannot drop you. That's what public insurance means, and that's why it's the only alternative to the FAIR plan, not the private market. The private market is completely unsustainable and has proven to be so.
Thank you. We go next to Patrick Wolf.
Hi, thank you. So no, the FAIR plan is not sustainable. Here's what we need to do. First of all, we need to fix the regular admitted market. There is no fix to the FAIR plan without fixing the regular admitted market with way more carriers coming in. As a condition for the carriers coming into California with the market reforms that I've described earlier, that insurance companies need to be required to invest in the operations of the FAIR plan so that it offers tolerable service while we still need it. Eventually, as the regular admitted market heals, people will be able to get better and cheaper coverage there. This will encourage them to move off the FAIR plan, and we need to help that encouragement. First, there may be actions we need to take so that certain captive agents that only work with one insurance companies are incentivized or at least required to tell their customers they can find coverage elsewhere. But also, secondly, the FAIR plan pricing needs to become fully actuarially sound so that it can stand on its own 2 feet. We stop pushing losses onto non-FAIR plan customers, and those customers can go to the regular admitted market where they'll be well served.
Thank you. We go next to Ben Allen.
Yeah, I think we all know it's not sustainable on its current trajectory at all. It's totally oversubscribed, undercapitalized. It's tripled in size in the last 4 years. It was never built to handle this kind of influx. It's become an easy place for the insurance industry to shove people off and get off of their books and into this bare bones system. Now, that doesn't mean we should get rid of it, tomorrow. I mean, a lot of people really rely on it, and so it's really important for us to have it in place, but ultimately get people into better insurance programs. And I think that actually gets back to what Sean was talking about with regards to a reinsurance program. If it's targeted and incisive, we can help to shore up some major inadequacies in the market right now, because right now the global reinsurance market is so spooked by the perception of risk in California that it's leading to increased premiums on everybody, because that ends up trickling down into the market. So a really tactical reinsurance approach could make a big difference here in getting people back off of the FAIR Plan.
Thank you. We hear next from Stephen Bradford.
Growth of the FAIR Plan is a clear indication of how broken the admitted market is. Many people continue to refer to the FAIR Plan as the policy of last resort and now as only resort. But we know the history. It was designed to be the policy of only resort for African Americans, because it was started in 1968 when traditional insurance companies stopped writing for African American communities after the Watts civil unrest in 1965. So we need to know that history. It was never designed for mass population as we see here. It was never designed to be a permanent fixture. It was, instead of using race today, we're now using zip codes and income. We need to depopulate the FAIR Plan by stabilizing and reinvigorating the admitted market and bringing forth greater competition. And I would support AB 226 to issue bonds to help provide to liquidity, because it's $1 billion overextended right now. So making sure that they have the liquidity to cover those premiums.
Thank you. Finally, we'll hear from Merritt Farron.
Yes, so the FAIR Plan is completely unsustainable, and because it can make capital calls on insurance companies, it is itself keeping insurance companies from writing more policies in the state of California. Months ago, I proposed my program, which I call Cal Reinsure. It's modeled to get us off FAIR Plan by creating a reinsurance authority similar to what Florida has done to solve its hurricane insurance crisis, similar to what the UK did to solve a flood insurance crisis they're having there, and similar to what the United States did after 9/11, when the marketplace for terrorism insurance froze up. Cal Reinsure would move just that one singular risk to a reinsurance authority so that your insurance company, no matter which it is, large or small, can write your policy and not worry about that one risk. The risk gets picked up statewide by the reinsurance authority. And if you lose your home, you get paid out to full policy max within 30 days for your personal property in your home. Simplification is what we need to get off FAIR Plan. Thank you.
Thank you. Moving next to question number 4, which will go first to Sean Lee. The question is as follows. Residents throughout the Bel Air Beverly Crest Neighborhood Council area are receiving non-renewal notices or have already lost their private homeowners insurance entirely. In many cases, the California FAIR Plan is their only option, and provides only basic fire coverage at premium prices. The question is as follows. What specific actions would you take in your first 100 days as insurance commissioner to restore meaningful insurance availability to homeowners who have been dropped by private carriers? Please be sure to name concrete tools and not just general principles. And we begin with Sean Lee.
Thank you, Alex. Yeah, as one of the biggest consumer protection agency, Department of Insurance, we have 1,400 employees. When I become insurance commissioner, first day I will hire 3 people: chief data scientist, chief AI official, chief communication official. We want to, from day one, first day, we want to have transparency. Anything I do, we want the public to know. So I hire 3 people, and the first 100 days, I want to do 4 things. Number 1, we need to have an emergency regulatory relief for reinsurance program. Number 2, we need to have a fast track rate filing instead of a drag, okay? Number 3, we need to review FAIR Plan capacity. Number 4, set up public-private wildfire risk pool, which is for my CCRP program. Thank you.
Thank you very much. And we go next to Mr. Vargas.
Yeah, the first authority that the insurance commissioner could levy in this instance is to actually restore the moratorium on non-renewals. Ricardo Lara actually instituted one after the LA fires, but it was only for 12 months. That would actually prevent any further non-renewals. At the same time, I would task the enforcement branch of the department to launch an audit on the major insurers in the state and look at all of their non-renewals, examine which ones have broken the insurance code, which ones have broken the law, which ones are using gray areas or loopholes, and for those that are found to be breaking or in violation of the insurance code, to recommend criminal charges to the Attorney General of the state to pursue that through litigation as well. And so this way we can use enforcement and accountability to close the loopholes, to rein them in, and to make sure that people are no longer dropped by their insurance carriers, and even reverse the non-renewals in some instances, in instances where we're permitted by law.
Thank you very much. Patrick Wolf, you have a minute.
Thank you. I think there's a long-term approach and a short-term approach. So the long-term approach is to make sure that the reforms are currently underway, which are called the Sustainable Insurance Strategy, are carried forward and strengthened, to make sure that we make it much easier for insurance companies to get their filings reviewed and approved. We need to make California a much easier place for insurance companies to come and do business, all while holding them very accountable. That's the long-term fix. The short-term fix to the solution may actually be to educate people aggressively about the availability of what's called excess and surplus lines, which is to say insurance by insurance companies that are domiciled outside the state of California. That's not a long-term fix because that's not regulated by the state of California. It's often more expensive, but it is often better than the FAIR plan, and it's often too difficult for people to access that insurance even though it's out there. And so I think that's something that we should do. A moratorium on non-renewals, while it sounds nice, would actually break the system further.
Thank you very much. A minute next from Ben Allen.
Yeah, no, I mean, this is an issue I'm painfully aware of representing the Palisades, given how many people were dropped just even a couple of weeks before the fires hit, really leaving people high and dry. I'm actually working on this issue right now. We just got a very difficult bill through the State Senate Insurance Committee, my bill, SB 1301, which basically it's a non-renewal transparency bill. It gives people more time, a guaranteed 3 months before they are dropped. Then the insurers have to have clear property-specific reasons for non-renewal to give people the opportunity to mitigate or find another carrier. It requires the insurers to offer mitigation options when possible, and it also prohibits improper non-renewal practices, like just because you make inquiries or have uncovered claims, those kinds of things. So I'm working on this right now because I know what a massive issue it's become. It's really leaving a lot of people high and dry, particularly in neighborhoods like yours. And we need to have more rules in place before people are just getting dropped willy-nilly. Again, it's not saying we can't do it. It's just that you should be given more time and more information as to why, so you can mitigate.
Thank you. A minute next goes to Stephen Bradford.
With the customer service division and financial analysts and actuaries within the Department of Insurance to issue an emergency extension or exact term of extension of the policies. The commissioner can do that right now. So I would use those powers right now to extend these policies in these areas where folks are not being renewed. I would then sit down internally and work with the men and women again to review the insurance agencies and understanding why they are denying and failing to renew these policies, and examining their books and understanding what their reasons for these denials are. And if it's not validated in any kind of way, we would fine and penalize them for their failure to renew these policies. But right now, this insurance commissioner can extend policies right now with the authority within the department.
Thank you very much. The next minute goes to Merritt Farron.
Hi there. So I come from Disney, where when we had a movie that had to be released, we had a firm date. And when we had a theme park attraction that was going to open, we knew we had to make the date. 100 days is really short, right? The fixes for this are to fix the regulations to allow companies to come in and provide more opportunities for consumers, and to launch Cal Reinsurance. So 100 days isn't enough. How do we buy more time? Ricardo Laura should resign now. Right? If he resigns now, and if a replacement is appointed of someone who is capable of moving things forward, we will buy ourselves at least 7 more months. 7 more months plus the 3 you've given us is realistic to make a difference for people. Thank you.
Thank you very much. The next minute goes to Stacey Korsgarden.
In the first 100 days, well, throughout my being commissioner of insurance in California, my focus is to advocate for the consumer, which means lower rates and more accessibility of policy choices. I would look for legislator heroes that would help me with the environmental laws that are stopping us from mitigating our fire risk in California. It's been decades of stacked brush, poor land management. I would be looking for some heroes that would help make some changes, and also those that would help fund Prop 36, which 70% of California voted for to lower crime. The second thing is I will establish a new business division on day one to welcome insurance companies into the state of California. This will depopulate the FAIR Plan and immediately give people choice so they can compete and shop for what's best for them and their family and their business.
Thank you very much. For this next question, the first candidate to speak will be Lalo Vargas. Under California's Proposition 103, insurers must get prior approval for rate increases. They cannot use forward-looking catastrophe models to price risk, and they also cannot factor reinsurance costs into their rates. Insurers claim that this prevents them from charging rates which reflect actual risk, and they've left the market in California as a result. Consumer advocates say that loosening these rules will make insurance unaffordable without any guarantee of coverage. Candidates, our question is this: should California allow insurers to use forward-looking wildfire catastrophe models and factor in reinsurance costs when setting rates? And if so, what protections would you put in place to ensure that rate increases are justified and that insurers stay here in California? Lalo Vargas, we begin with you.
So while I'm pursuing building a public insurer, I understand that we need a transition to that in the interim, and that means tolerating the private insurance market. And even if we do everything in our power to make sure that people have policies, who's to say that those policies won't be charging well beyond what most people can afford? Now, we're in the climate crisis because of the fossil fuel industry, the billionaire-owned fossil fuel industry that has broken our environment. And I think if you break something, you should pay for it. So absolutely, we need to price risk accurately, and we need to use CAT models. But why should ordinary working people pay the costs associated with those CAT models? It should be the fossil fuel industries and their billionaires who pay for that difference in costs. As far as reinsurance goes, if I own a car, I have to pay insurance on that. If I own a business, I have to pay insurance on that. Why should the business owners of the insurance companies be any different? They should not be allowed to pass the cost of the climate crisis on to ordinary consumers. They should be responsible for that. So I'm not for charging consumers for this crisis. I'm for charging the fossil fuel companies and the utility companies as well.
Thank you. We'll hear next from Patrick Wolf.
So thank you for the question. First of all, I want to emphasize something. The ability to use forward-looking models to predict wildfire risk, the ability to count the cost of reinsurance and the allowable rate of return, these are not baked into Proposition 103. These evolved over time with how the regulations were implemented within Proposition 103, and they've been changed recently as part of the sustainable insurance strategy. And yes, I absolutely support those changes, although I do have some problems with the specifics in which they've been done. Similarly, with the intervenor process, Proposition 103 actually contemplated a much faster review process because Proposition 103, as written, did understand that rates had to be neither excessive nor inadequate nor unfairly discriminatory, and the review process had to be relatively expeditious. And again, those regulations can be reformed within that structure to make the market work much better. And finally, I really want to emphasize that the question doesn't focus enough on holding insurance companies accountable, which is so critical, and not just the price. Thank you.
Thank you. Next up, we will hear from Ben Allen.
Yeah, I really Patrick's answer certainly resonates with me. I think he's absolutely right, including his interpretation of Prop 103. What I will say in addition is that yes, we should be using forward-looking models. We actually passed a public model that is now available. That it's going to be built out by academics. So it's not just hide the ball by the insurance companies, but this is a public model we can all access, we can all feed into and be a part of. That will be transparent to everyone and help to determine how we're going to plan. Lalo's point about how there are a lot of people responsible for climate change, including the fossil fuel companies, and they have a role to play here too, I think is a good one as well. There's legislation that's been stalled on that topic, but I think an important discussion point because it would have given the Attorney General some more powers to go after the fossil fuel companies companies for all the costs that their activity is bearing upon the fare plan. So,
We'll have to leave it there for now. We'll hear next from Stephen Bradford.
So I would support the sustainable insurance model and using catastrophic modeling. Up until a year and a half ago, we were only one of 2 states, Arkansas and California, that didn't use it. We got to understand that California has one of the most aggressive climate goal policies in the nation. But at the same time, we have to factor in climate change happened well before there were planes, trains, and automobiles. If we believe that this planet started as an ice age and evolved to where it is today, well before trains, planes, and billions of people, we have to factor that in. As Al Gore stated, if we're going to say climate change is real, we have to be willing to understand there's a cost associated with it. Prop 103 was not talking about climate change 38 years ago. So our pricing does have to factor the changing environment that clearly is impacting insurance rates and coverage. And reassurance is a factor that's not only happening in California, but across the nation and around the world because of climate change, and is affecting pricing. So that has to be factored in.
Thank you very much. We'll hear next from Merritt Farron.
Hi there. Yeah, to be clear, as I'm sure everybody here knows, certainly there's climate change, but the Pacific Palisades didn't burn down directly as a result of that. It burned down because our community had left the reservoir empty that should have had water for the fires, and there was no water in the fire hydrants, right? Your question is a good one. It's an absolutely appropriate one. The answer is complicated, and let's be clear. So yes, we have to allow insurance companies to innovate, as I said. And in the rate hearings, I actually proposed that we change the approach to rate setting to take account of exactly these factors. And at the same time, we need to be thoughtful about the impact that will have on individuals. Part of the problem with the rate setting process is it allows, in general, a huge increase in rate setting, but your rates are not actually controlled. We need to get the insurance companies to regulate the changes individually, home by home, so that we don't hit people too hard. They will be driven out of their homes and are being driven out of their homes today because we're hitting them too fast with increases. Thank you.
Thank you. Stacy Korsgaden.
So the question is, should insurance companies use forward-looking models? And the answer is yes. I do want those listening to understand where we are right now, though. We were, as an insurance industry in California, only able to look at backwards modeling. And then due to Sacramento's decisions on lack of mitigation, lack of crime, all of the risk factors, which I call rising risk factors, those changed. Then at the same time, the Department of Insurance said, well, you can't change your rates. So that's where the dysfunction is. This is where the hope is, and why I'm so optimistic. With good leadership at the Department of Insurance, we can lower those risk factors that determine rates, whether it be in home or auto. All of the risk factors can be lowered. We bring in more competition. We have good leadership at the Department of Insurance, and I am very hopeful with what can happen in the insurance line.
Thank you. Sean Lee.
You. Yeah, candidate shared all knowledge, so I don't need to repeat. My simple answer is yes to the forward catastrophic model, but with reinsurance component. Besides that, I want to emphasize transparency and accountability. Both Stacy and Merritt emphasize the government efficiency, the policy is the key. So the reason I said I will appoint a chief AI official. So AI could be useful, but could be also hurt the individual. So we need to make AI accountability tool in management, also in pricing. Last, for consumer, we need to enforce rate justifications trigger. Not because we give them forward model, they can increase the price whatever way they want. We have to put a trigger, make sure they behave, and the consumer can stand it. Thank you.
Thank you very much. We appreciate it. And now we'll hear from Mr. Vargas. Oh, forgive me. I'm sorry. That was not, we're jumping ahead. By the omission of our one candidate, I'm trying to keep all these trains running. We're moving to our next question, for which the first response will come from Patrick Wolf. Homeowners who lost properties in the Palisades and Eaton fires are discovering that their coverage, whether fair plan or private insurance, does not come close to the actual cost of rebuilding. Studies show average coverage gaps exceeding $1.5 million per home. Many survivors report that insurers are delaying, disputing, or minimizing their claims. The insurance commissioner does have enforcement powers over claims handling. Our question is this: what would you do as insurance commissioner to close the underinsurance gap and hold insurers accountable for timely, fair claims payment after a major disaster? And how would you ensure that fair plan coverage limits keep pace with actual construction costs in high-cost areas? Mr. Wolf.
Oh, great. In a minute. All right. Well, so first of all, I will say that there is a bill in the Senate. I forget whether it's 877 or 878, the one that puts an interest penalty. I think that's a good bill. It looks to me like it's in a good place. I think that's great. And so that will help to create enforcement for timely payments. I think underinsurance problem is a real big one. And there's a big bill in the legislature right now. We'll see where it shakes out. But I want to emphasize this has been going on for decades, and the root cause is the insurance companies have been using the same software from one or two companies, and that software routinely underestimates the rebuild cost, the amount of coverage you actually need. And the Department of Insurance actually has this information, at least on a statistical basis. And so I do think that there is an opportunity to provide that information along with the opportunity to purchase additional coverage. And this is something, a policy I developed in conjunction with Ken Cohen, who's a professor, who's an expert in this area.
Thank you. We'll have to leave it there. Ben Allen.
Yeah, no, I appreciate Patrick bringing up SB 878, which I'm working on with Sasha Perez, who represents the fire survivors. And it's a claims accountability bill that basically penalizes unjustified delays with interest. And it requires timely payment of undisputed claims. It increases transparency and accountability in claims handling. So that's a really important step in the right direction, because we know that part of the insurance industry's model is to deny, delay, wear people down. They keep making money in the market. And they want to just kind of delay their payouts as long as possible. I'm also working on a bill, SB 1209, which increases enforcement powers at the department. One of the things we found, I've kept going to the department saying, why aren't you pushing back? Why aren't you, knocking these things down as all this ridiculousness has been coming to my attention as my constituents have been screwed around with. And it turned out there were some issues relating to enforcement. So I'm running a bill now to strengthen their enforcement authority, requiring timely collection of violations, correction of violations, giving them penalties associated with violations. So it's about strengthening their enforcement powers.
We'll need to leave it there and turn next to Mr. Bradford.
I think there should be fines and penalties for insurance companies who delay or deny claims in a timely manner. I also would want to have a staff within the Department of Insurance, bolstering that staff so they too can quickly review those claims. Right now in the department in that area, they're woefully understaffed. So we would have to beef up the review team in the Department of Insurance to better scrutinize and review everything that insurance companies are doing when they say delay or deny a claim. And that's part of the problem right now. What I would also want is a forward-looking dashboard within the Department of Insurance to educate the consumers of understanding what their policies provide them. So being very, very clear and working with the agents to make sure that they educate their clients as well, because many folks have bought a policy 20, 30 years ago and they haven't reviewed it. They just renew it every year. So I would want consumers to be educated and have a forward-looking dashboard to understand what those costs are today.
Thank you. We'll hear next from Merritt Farron.
Yeah, so underinsurance is in fact a huge problem, obviously, in the recent fires, and it's been a huge problem for decades, hasn't been fixed. So if I were insurance commissioner, when I'm insurance commissioner, I will get the insurance commissioner to work zip code by zip code to come up with estimates of rebuild costs dependent upon the type of home. And we would publish that. We would obligate your insurance company to get that in front of you and to have you check a box if you are not fully insured, to ensure the consumers are fully insured. That's number one. Number two, to help with the situation after the fires, the insurance commissioner should jump straight in, right? If I had been commissioner, I would have already come out with very strict rules on smoke, on remedies for smoke damage and on rebuild costs. I would have put out estimate ranges that the insurance companies would then be advised to use. Right now, consumers have been left to struggle insurance carrier by insurance carrier with rebuild costs. That's not okay. Thank you.
Thank you. We'll hear next from Stacy Korsgaden.
Thank you. The Department of Insurance has a strong lever of enforcement, and that would be investigating complaints, issuing subpoenas, imposing fines, and money talks. And as commissioner, as I was an insurance advisor, I was very strict in holding all parties accountable and protecting my consumer, my client. So for my entire career, I've always been concerned about the valuation of property. And that was something that I always kept tabs on. We have the intellectual or the AI capability now based on replacement costs to do a better job in holding companies accountable. That's very important because why insurance companies exist is to serve the client and to pay out when a claim payout's needed. So we have to make sure that the companies are using up-to-date data.
Thank you. We'll hear next from Sean Lee.
Yes, I believe our current both auto and home claim system are rusty, are out of date. So when I become insurance commissioner, first day I want to enforce all the insurance company need to start build a brand new cutting edge claim system. If before a few months or sometime more than a year, if we can finish within few weeks or even few days, all those lawyers, especially the company, will not come to mess around, drag the process and the payment so few thousand and become 10, 100,000. So I believe all is a systematic issue. They really underinsure because the insurance companies think a lot of claim not adjustable and drag them long time. So it's time to build a cutting edge new claim system. I did 10 years ago after I visited China for called e-claim. I fired the brand and started building for auto insurance.
Thank
Thank
you.
you.
We'll hear next from Lalo Vargas.
I would argue that under our current market insurance system, everyone is underinsured. There's no guarantee that you will receive a timely, fair payment for your claim. The insurance companies are rotating their adjusters. They are delaying and denying claims artificially. So I agree with Senator Allen about levying heavy penalties with interest on those that are found to be using these criminal business practices. But we also have to be honest about the fact that their business model is premised on these shady business practices. It's premised on the fact that insurance is a commodity that is bought and sold for profit, and that insurance is not treated as a human right. Insurance should absolutely be treated as a human right, and that's why I propose a public insurer. As far as the FAIR Plan coverage, I think that we can't expect the FAIR Plan to keep pace with high construction costs because the private insurance market can't even keep pace or does not want to keep pace with construction costs. So we can't expect the FAIR Plan to do so because the private insurance market runs the FAIR Plan as well. So the only real long-term alternative is the public option.
Thank you. For this next question, we'll be hearing first from candidate Ben Allen. California law currently requires insurers to offer premium discounts to homeowners who harden their homes against wildfire, such as upgrading vents, replacing roofing, and creating defensible space. The Department of Insurance's Safer from Wildfires framework establishes those standards. However, many residents who have spent tens of thousands of dollars on fire hardening efforts report they still cannot get private insurance or that the promised discounts are minimal at best. If elected, how would you strengthen the link between wildfire mitigation investments and actual insurance availability and affordability? Should the state provide financial assistance to low and moderate income homeowners who cannot afford to harden their homes? Beginning with Ben Allen.
Yeah, well, I really appreciate the question because I think it's at the heart of our path forward. First of all, of course, yes, I'm actually running a bill right now to provide a state-backed low-interest loan program for people to engage in home hardening. Now, we know that we also need, one of the things the insurers keep saying is, oh, well, you may have hardened your home, but if none of your neighbors have, you're still considered a high risk policy. So one of the things we have to really focus on is community resilience. I'm actually working on a bill as well to encourage and facilitate greater public and private investments including from the utilities and the insurance industry, working with public sources to try to reduce community-wide resiliency risk. It's also why I was the author of Prop 4, which is the big bond that we just passed. That's finally pushing out resources to better manage our wildlands, to make our forests more healthy, to also build out our water infrastructure. I've done some work on water theft from water hydrants to just make sure the system is better prepared for a major fire in the future. In the end of the day, that's going to be at the heart of this. How do we really invest together, both as individuals and as a society, in really scalable risk reduction?
Thank you. We'll hear next from Stephen Bradford.
Yes. Mitigation credits should be embedded in rate approvals. If in order to do business in California, I will hold insurance companies accountable to make sure that they offer reasonable and impactful rate reductions for those individuals who take the proactive measures to harden their homes and do the vegetation management. They should be rewarded for that. And right now, we need a blueprint so consumers will know what they should do and what they get credit for. Because right now it's willy-nilly. And as Senator Allen stated, in some places we've heard where residents taken the necessary actions, but their neighbor didn't do it. You shouldn't be penalized because your neighbor didn't take those actions. So if you do X, Y, and Z, harden your home, insurance companies have to live by that, have to abide it. I would also use the Cohen agency within the Department of Insurance, California Organized Investment Network, to help those low-income folks to do the hardening and mitigation procedures that they need around their home if they can't afford it. It's millions of dollars in the Cohen agency, and I would use that money to help those homeowners.
Thank you. We'll hear next from Merritt Farron.
Yes, thank you. There are two pieces to this. First, we absolutely need to require insurance companies to make clear commitments on the discounts they are going to provide if you do home hardening. And connected with that, they need to commit to you that they're not going to cancel your policy for a substantial period of time that equates the investment you make once you make them, right? I've heard from apartment owners too. Apartment owners today are getting hit with capital improvement demands by insurance companies. They make them, not necessarily all related to fire, liability risk. They make them at considerable cost, and then the insurance company still comes off after they've spent all that money and cancels their policy. The other piece of this is community safety. I would come out with a set of standards that cities and counties need to meet to avoid the kind of catastrophe that we had in the Palisades. We've known for a long time that community safety is what keeps the fires in check, even after the Oakland fires. That was a long time ago. Thank you.
Thank you very much. Stacy Korsgaden.
I love this question because the answer is absolutely yes. The homeowners should receive a large discount. And I know people have put thousands and thousands of dollars in their home. That's one spot in the map. The federal government and the state government own 50% of the land in California. We have a failure of management of those lands, failure of management of the waters, and we have not mitigated. We can go from fire-wise communities, which are fabulous. The process of doing that is great. We can look at a county level, and we have to hold the state and federal governments responsible. We did not have these mega fires always. What we've had is an increased number of severity of these fires because of policies from Sacramento not keeping us safe from crime and fire. So this needs to happen before we see these deep discounts and these wonderful homeowners are taking care of their homes.
Thank you. Sean Lee, you have a minute.
I want to add to echo Stacy and Senator Sherry. Number one, I propose something called guaranteed premium credit. We set up some standard, how to mitigate, how to harden their home. Then we provide a guaranteed premium credit. That's number one. Number two, as I echoed in the beginning, we need to have an ecosystem with the community level underwriting instead of just roughly a zip code, which the Senator proposed, I believe, already. So we need a lot of people work together, just like a HOA, just like Leslie, everybody put the communication channel today together. So we are in all this together. We are in the same village. Okay, thank you.
Thank you very much. Lalo Vargas.
Yeah, I absolutely think that the state should provide financial assistance all homeowners, not just low income and moderate income. I want public insurance, whether it's for healthcare, whether it's for homeowners insurance, for everyone. And that means that we have to pay for it somehow, right? We have to find the money, and there's the money. We have a $4 trillion economy, but a quarter of that wealth is hoarded by the billionaires, the owners of the fossil fuel companies and the utility companies. So we absolutely can pay for mitigation and home hardening efforts, but we have to be willing to infringe on the profits of the billionaire class. That means a permanent wealth tax. There's a one-time wealth tax on the ballot this year, actually, but we need, as insurance commissioner, I would push for a permanent wealth tax. Even 2% on the wealthiest Californians would bring in tens of billions of dollars in annual revenue. We could pay for mitigation for homeowners. We could even provide refunds for those who have already invested in that in their homes. So absolutely discounts to homeowners, but we should not penalize those who will not be able to transition in the 3-year time frame.
Thank you. And finally, for this question, 1 minute goes to Patrick Wolf.
Thank you. So the reason the Safer from Wildfire program is not working well is it's not well designed by the Department of Insurance. The discounts that they require of insurance companies do not align with how they underwrite. The guidelines are not well enough grounded in science. There's a recent report from SB 254 that actually lays this out, what I've been hearing for a long time, and makes recommendations that there should be better tiers and more so that you get more bundled together, which you require closer to the science. I agree with that. But more fundamentally, it needs to be a requirement for insurance companies to come in that they tell us what they will recognize, and they all have to compete around that, and they have to offer meaningful discounts for that. That way you align it with the insurance companies. That's smart regulation that makes them compete on what will make homes safer. And we have to provide direct financial assistance 100%. I'm glad there's yet another bill on this, but there was a bill passed last session, AB 888, that authorizes the Department of Insurance to develop financial assistance programs. They need to be doing that because, yes, when you harden your home, you help your neighbor as well, and there's an equity component on top of it. Thank you.
Thank you. This is the final question for which each of our candidates will have a full minute to respond. The first respondent we'll hear from is Stephen Bradford. This is a question regarding Zone Zero. The new Zone Zero regulations in development by the Board of Forestry and Fire Protection will require steps to make an ember-resistant zone in the first 5 feet from structures. For many hillside homeowners, compliance means ripping out mature landscapes. New construction must comply immediately. Existing homes will have approximately 3 years. The question to each of you is, should compliance with Zone Zero directly affect insurance availability and pricing? That is, should insurers be required to offer coverage or discounts to compliant homeowners and to non-renew or surcharge non-compliant customers? And given the cost of compliance, is there a role for the insurance commissioner in ensuring this burden doesn't fall on the most low income of residents? Again, Mr. Bradford, you'll begin.
Again, I'll start with saying, yes, they should offer a discount for compliance. If homeowners take the necessary actions and remove brush and shrubbery away from their homes and wooden fences, they should be rewarded. Again, that's why we need a blueprint standard so we understand what those requirements are. And again, I would lean on the Cohen division within the Department of Insurance to assist those low-income families who live in these rural areas, because many times you think you live in these rural areas that you all are wealthy and have hillside homes. A lot of folks are low-income folks who that's all they can afford, but they can't afford to do the hardening. So yes, they need to do. We need to provide them with assistance with the home hardening, and other states also are offering tax rebates for homeowners too. So I support Zone Zero, but some of the shrubbery that they're talking about moving, like succulents, will help resist and stop fire. So I think some of them need to be included instead of being removed.
Thank you. We'll hear next from Merritt Farron.
Yeah, so look, in general, we need to be allowing for a variety of different insurance products. We need to let insurance companies innovate, and we need to let them use risk-based pricing in connection with that. So that means that if your home is more fire hardened in various ways, that should be taken into account. But I don't think that we should have dictates from the state about that, because the reality is neighborhood by neighborhood, the risk differs. In the Palisades, my home wasn't even in a fire zone, and yet the entire neighborhood burned. right? So there are other things that we can do which will be more useful to actually protect homes than simply requiring cutback. The final thing, as I mentioned before, though, as we move to risk-based pricing, we must ensure that we do not allow prices to move so high that they put families' financial future in peril, right? We have to take that into account. We have to work that into our move into risk-based pricing. Thank you.
Thank you. Stacy Korsgaden.
So as far as Zone Zero and the research that I've done through the Fire Safe Council, the development and the actual construction items that are on the marketplace now are awesome. And I've seen the studies of what's happening if they clear foliage and growth 5 feet from the home. It's a very significant improvement on the chances of a house surviving. I'm never for any type of government entity telling a homeowner what they need, how they're going to garden their house. But I do believe that discounts should be available if there's a home hardening action taken by a homeowner. I am definitely for a tax credit. And so those are things that I would look for, but discounts, yes. Demands from the state of California, no.
Thank you very much. For the next minute, we'll hear from Sean Lee.
Become the new insurance commissioner, I will work closely with the new governor, new attorney general to cut the fraud. Through that process, I believe we have enough funding to give support for homeowners who put a lot of hardening, a lot of work to alleviate the risk. For insurance company, I strongly suggest they reward compliance too. So that's my simple answer. Thank you.
Thank you. We'll hear next from Mr. Vargas.
So yes, I think that we should offer discounts for those that are in compliance with Zone Zero early. I think we should incentivize more of that. But on the flip side, we also shouldn't penalize those who cannot comply with Zone Zero right away. I think given wildfires and the increasing costs of everything, people should have the option whether they want to rebuild, whether they want to stay in their home, or whether they want to move out. The state should step in and provide an equal opportunity for any of those pathways, really. And I'm not really for consumers taking on, on an individual basis, that increased cost of transitioning to Zone Zero. I think in the interim, we have to do everything we can to transition folks to that. But we need to start taxing the billionaires first. Once the billionaires are paying for their fair share of the crisis, which is really all of it, then we can talk about homeowners and consumers paying for their own mitigation, whichever pathway that may look like.
Thank you. Patrick Wolf.
Thank you. So first of all, to quickly answer the question, yes, there should be appropriate discounts that are aligned, for comporting with Zone Zero, that are aligned with how insurance companies underwrite. And yes, we absolutely need to provide assistance to folks on an equity basis who need it. But I'd like to take 30 seconds to pull back for a minute, to pull back and talk about how painful this is. If you live in one of these areas, the climate has changed. You have done nothing wrong, but the climate has changed and the risk has changed. And you're now confronted with the fact that the fire doesn't care about your landscape, and the fire doesn't care about what's fair, and it doesn't care about how much you love your home. It just burns. And that's why we have to work together to come up with smart regulations that work with all of us, because individuals are not taking this risk on their own. If your house burns, it puts other people at risk. That's why this is so difficult, and we have to work together on it.
Thank you. Ben Allen.
Yeah, I would say that the Zone Zero regulations that first came out, I think went way beyond what were necessary. I actually sat down with the head of an insurance company who said, "Look, in the end of the day, from my perspective, if you have vegetation up against a well-sited, wall on a house that's not near a vulnerable eave or single pane glass, from his perspective, it's not major risk. If you have well irrigated, healthy native trees, for example, they can actually catch embers. as opposed to increasing risk. So the question is, how do we draft this in a way that basically gives maximal flexibility to homeowners while still being helpful to our broader firefighting efforts? That's going to be the lens that I'm going to be focused on. How do we do what we need to do to reduce risk in communities while being as least invasive into the rights of homeowners and property owners as we possibly can be? That's got to be the lens.
Thank you very much. We are now about to transition into what we are calling our lightning round session to end things up. A note to our timekeeper, who's done a tremendous job this afternoon. Aaron, if we could put 30 seconds on the clock for this next question. The question will go first to Merritt Farron. The question is this, and candidates, you will each have 30 seconds to respond. Should California create a public or state-backed insurance option, one that would directly compete with or replace the private market for high-risk properties? Yes or no? And if the answer is yes, please describe your alternative in the time remaining. Merritt Farron, we begin with you.
The answer is no, but we should create Cal Reinsure, right? Which will be an authority that sits above insurance companies, that allows the insurance companies to move wildfire risk away from their own books and onto Cal Reinsure. That's my answer. Thank you.
Thank you very much. Stacy Korsgaden.
No, the answer is no. What we need to do with great urgency is open up California to new insurance companies to depopulate the FAIR Plan. The FAIR Plan for decades has basically worked. There are some changes that are needed as far as funding if there's a catastrophe, but in essence, it's worked. We need to have greater abundance of carriers in our state.
Thank you very much. We'll hear next from Sean Lee.
We know 12 years ago when President Obama wanted everybody have health insurance, so the price, the premium will drop. But 13 years now never drop. So my simple answer is no. That's why I propose California reinsurance partnership. Add one more layer. So DOI more like a referee. Get all the private player come together, add one more layer. So private equity fund can participate. That's my proposal.
Thank you very much. Lalo Vargas.
The nature of insurance is socialistic. It works better through the collective. So absolutely, we need a public state-backed insurance option. My campaign was the first one to champion that in this race. Many countries around the world have some form of public insurance. Canada, New Zealand, Germany. It's absolutely possible to fund people's needs and to fund insurance as a real safety net, but we have to remove the profit motive from the equation. Otherwise, we're going to continue to see the same crises as before with the private insurance market.
Thank you very much. Patrick Wolf.
No, and it's important not to confuse property and casualty with health insurance, which is completely different. Primary property and casualty insurance run by the government, we have experience with that. It's called the National Flood Insurance Program. It's existed for almost 6 decades. There's tons of literature on it. It has been a failure. But when the federal government gets it wrong, they can issue treasuries. We can issue treasuries. When the state government gets it wrong, we can't. We have to balance our budget. That comes out of education. That comes out of Medi-Cal. No way.
Thank you very much. Ben Allen.
Yeah, I mean, building upon Patrick's comment, I think the challenge is, but I think your question was, do we have a state-backed program for high-risk properties? That's basically the FAIR Plan on steroids, and it could create massive liabilities for the state. It's not a good idea to concentrate the highest risk properties in a pool that then the public is left holding the bag for, given all those other massively important public needs that are out there. Now, what exists in New Zealand covers a baseline, so that goes up to about 165,000 per property. We could talk about that, but
another time. Unfortunately, we have to end there, and we'll have our last 30-second answer from Mr. Bradford.
My answer too is no. Again, I was elected to Gardena City Council in 1997 because the city of Gardena started their own public insurance company that almost bankrupted the city 4 years later. So I would say no, but I would look at a 3P, a public-private partnership, as a temporary stopgap, not to compete with private entity, but to stabilize the market until our invited carriers come back.
Thank you to our candidates for your stamina, for all of your time and expertise here. For our final two questions, you don't have to say a word. These are both yes or no questions. I will give you an opportunity. If your answer is yes, you may raise your hand. If your answer is no, you may raise your hand, and we will all do this together as a group. Here is the first question. Yes or no? Would you support a take-all-comers rule requiring any company that sells auto insurance in California to also offer home insurance to qualified applicants in high fire zones? If your answer to this is yes, raise your hand. Support of a take-all-comers rule. Thank you. If your answer is no, please raise your hand. Thank you very much. Your last and final question. If an entire FireWise USA community achieves Zone 0 compliance, would you support a mandate requiring private insurers to move those residents off the FAIR plan and back into the private market as a group? One more time. If an entire FireWise USA community achieves Zone 0 compliance, would you support a mandate requiring private insurers to move those residents off the FAIR plan and into the private market as a group? If your answer is yes, please raise your hand.
Can we say it depends?
If your answer is no, you can raise your hand. You will do with your hands what you will. Candidates, we thank you very much for your time today. With that, I will be turning it back over to Travis Longcore from the council. Thank you. And my thanks again to Aaron Lawrence for timekeeping.
Yes, and thank you, Alex, so much for being such a great moderator. We really appreciate you taking the time out of your day to do this. Thank you to all the candidates, Leslie Weisberg, Aaron Lawrence, Nikki Miner, Robin Greenberg, all helped put this event together today. And so with that, this being a formal board meeting, we're not going to take any action. We're just going to thank you and adjourn the meeting. So thank you, everyone. We
Thanks,
appreciate
Travis.
your
Thanks, Alex.
engagement,
Thank
and
you
thank
very
you, everyone,
much.
who attended.
I appreciate it.
Thank
Thanks,
you.
everyone.
Thank you.
Thank you for the
Thank you
opportunity.
so much,
Yes, picture file.
everybody.
Thank you.
Thank you.
Have
Appreciate
a
it.
great evening.
All right. Good
Thanks.
night, everybody.
Thank you.